Hi traders, and welcome to the Markets in 3 with me, John, Senior Market Analyst at Anzo Capital. I'm here to take you through the big FX stories of the day, as well as some key charts to check out. Today, we're going to be focusing on gold and the next big move and some key technical levels to watch. But before we get into that, let's do some housekeeping. We're going to be talking about what data we've got coming up, some key markets just to have a brief look at before we go into gold, and some just general chat about markets. So let's get into it. So first of all, I just wanted to cover my euro US dollar trade that hit full targets. Now, I got out of this a little bit early because it was a Friday, and I don't want to typically hold trades over the weekend at the moment due to obviously ongoing escalations between the US and Iran, or potential ongoing escalations between the US and Iran. So I ended up getting out of this one. But let me break down the trade. And I broke down this on Friday of why I was looking for euro US dollar to the upside. But essentially what it was we had a very strong chart, right? Very strong trading pattern, very strong trend to trade. And we also had a very strong idea that the market was going to continue up into this 116 because of the macro weakness that we are seeing in the US dollar. So what we saw, so let me take you to a daily chart first, and let me just talk you through sort of the theory of what was happening. So pretty much we had euro US dollar in a range between sort of that 113.37 down up to the sort of 114.50s. And we broke out of that range, right? Price shot through that range, consolidated before continuing to move to the upside, right? So I was looking at this for potential opportunities for a breakout higher because the dollar has been weaker. So whenever I look at a trade, I want to break it down into 3 tradable steps, right? And those three tradable steps are known as the the WCS method, right? And this is a method I've come up with myself. This is just something that I brought in to help me identify key trades and opportunities, and also help me when it comes to following a plan and a process. So the why was I looking for euro US dollar long? Well, it mainly came down to US dollar weakness. We've seen GDP data coming in lower. We've seen inflation data coming in lower. We have seen employment data coming in lower in the US. That's not typically a good story when it comes to interest rates. So for me, I was looking for the potential for the US dollar to remain weak. And the best kind of proxy to trade that is euro US dollar, right? Now, what we also saw over the sort of coming weeks and over the past sort of few weeks is the US yields have been falling. So if I just open up TradingView here, I'll show you what I mean by that. So let me just change my template. So let me go to the US yields, right? And this is the 2-year government bond yields in particular. So since the kind of end of July, so around about the 24th of July, US yields have been coming down. So we've been seeing US yields go from sort of 4.35% on the 2-year down to around about 4.1%, right? Now, that's not usually what you want to see if this market is suggesting there's going to be rate hikes to come, right? Now, we did get a rebound on Friday. The market did rebound, and we did see some US dollar weakness coming in, some strength coming in, sorry, because the yields rebounded from this 4.1% level. But still, yields have been down. If we look at the 10-year yield, we've been very choppy, right? Very, very choppy here, between sort of 4.7% highs and 4.6% lows, right? So very choppy on the US 10-year yields. And then the 30-year yields also reflecting a little bit of choppiness, right? Now, 30-year and 10-year stayed relatively strong, but the 2-year, which is the sort of the one the Fed really kind of keeps its eye on because it's close to current levels, has been falling, right? So because of that, combined with the US dollar data, I've been very bearish US dollars. Okay. So if we take a look at the US dollar index as well, which is just a reflection of Euro US dollar, we can see market broke out of a technical uptrend. We broke through the 100 spot 50 level, which was a key support point, broke below the daily 50 moving average, and we've basically been capped towards that 100 US dollar level, and price is now breaking down through the 99 spot 50. Now, we might get a rejection here. We might see price move higher, but I just think with the data that's coming out at the minute, it's not looking particularly that great. Now, a lot of drivers as well has obviously been the US and Iran situation going on in the market. Now, if I go to Brent crude oil, we can see that we are trading around about $80, $88, right? So that is obviously a little bit higher than when Iran war first began. And obviously it's a lot higher than the 2nd of July lows, which was around about $72. But still, it's not outrageously heading towards $100. It's not like breaking aggressively towards $100. So concerns around inflation have started to cool a little bit in the US, which is a big proxy into what I think gold could potentially trade higher as well. So that was my whole theory around euro dollar in terms of the trade, right? So that was my why. All of that information there about the inflation coming in lower, growth coming in lower as well, and also employment coming in lower, combined with the fact that there's not been any real kind of headline risk coming out of the US in terms of the US and Iran war, has allowed the US dollar to continue to weaken, right, including yields down. So that's only part of the story, right? Then we need to look at the conditions. So if I'm looking to basically buy euro US dollar, I need to see an upward trend on a higher time frame. So whether that weekly, daily, 4 hour, I need to see some kind of trend. Now on the daily, we're seeing that, right? The market has made new highs. So I was basically looking for the higher low to trade from, right? Now, when it comes to conditions as well, I'm looking at levels. What levels can we find? Well, the 116 level is a strong level of resistance. We can see that it acted as support through pretty much the entirety of May, and then acted as a resistance in June when price broke out and retested it. We could also see from the market profile, which I've anchored from the start of May down to the low in June, we can see that actually there is a large sort of volume area which starts to build up around about 116. So that's a good level to start targeting, because those areas can act as resistance. If price gets accepted in that value, it could go to the other side of value. So maybe we're even still looking for longs up to the 116.75. That being said as well, the conditions were there, right? So when I'm looking for a trade, I always think about that. YCS, right? Why do I want to buy euro US dollar? What are the conditions around that? And what strategy do I want to use to trade it? So the strategy for me was waiting for that daily chart to turn from a pullback phase into an impulse phase, right? So when I go to the hourly chart, then I apply my trading strategy. My trading strategy is very, very, very simple. It's a 50 and a 200 moving average. It's a stochastic that is oversold. And I'm looking for a break of some trend, right? So I can see here the market was making lower lows, lower highs, right? And then it changed. The market broke out, made a new high. So I entered long here. It also came into this supporting zone where we had lots of buying coming in previously, retested that, broke out. So I ended up going long here. Stop loss I put below the low. Now I ended up coming out just before my 2-to-1 and my 116 target, but like I said earlier in the stream, because of the weekend noise, I didn't want to get caught in a weekend gap and the market sort of gap lower on some, tension between Iran and the US. So unfortunately, I had to, I missed out on another sort of 1R there. So I could have had at least 3R out of this trade. But because of that war premium that's, still lingering, I didn't want to hold it. So I ended up coming out just before 2-to-1 on Friday, right? But great trade, right? From the whole process, The whole process of the Y condition strategy ended up being a fantastic trade. So let's move on to the more important thing, though, and why we're here today. We want to be talking about gold, right? Gold is a interesting market right now because we're very bullish on gold. Market has broken through some real structural areas. And if we look at the daily chart in particular on gold, the market has been very bullish, right? We were consolidating down towards the lows around about that $3,970 area up to that kind of $4,000 area. Market was very capped at those lows. We were getting really poor US data, but gold was trapped. It was trapped between 3,970 and the 419 highs, right? All in this area here. And what we saw was it was creating lower highs, right? And it was capped down at that 3,970. Then all of a sudden we burst out, right? Around about the 5th of August, the market took off. We broke through all these structural resistance levels and we closed out of the range highs, okay? What happened next was really interesting as well. We kind of paused and then continued to leg higher, right? And now we're still kind of remaining high. Although we've had a really strong bearish engulfing candle, which formed on the 13th of August. Since then, prices continue to rally. And I think it's for good measure. I think it's because we're starting to see the US dollar weaken. It's because of the fact that inflation is falling. We had the PPI data come out as well, which came in a lot negative and came in way below forecasts. So that also suggested that future inflation is going to come in lower as well, because that is a more forward-looking inflation measure. So everything's kind of pointing towards the fact that we may actually see a continuation of gold upside. Now, how do we trade it? That is the question we need to ask ourselves. Because when we look at the three-step method, where we have why do we want to be gold long? We can list those things. Dollar's weaker. We know that. So that is one of our main reasons. Why is it lower? Because inflation's lower, GDP's lower, labor's lower. So in theory, we have all these details here that suggest gold could break higher. We also have had really strong reports that retail are buying gold aggressively, super aggressive, to the point of they're buying it at levels where we saw previous rallies in the market. When I take a look at the commitment of trader reports, right, and we have a little look at what's going on in terms of metals, we can see that hedge funds are buying gold. In fact, last week, they added 23,923 contracts to their long positions, right? So that is a crazy amount. So in total, they did add to their shorts, but only very, very slightly. But that means there was 20,306 contracts positive in terms of the change there in gold positions. So even we are starting to see institutions, hedge funds, large speculators also trying to add into this move here, right? We can also see small speculators getting very, very aggressive on gold, trying to buy gold, right? Trying to buy it just before the rally going ahead, okay? And they've actually been pretty spot on over recent time. So we've got a combination of US dollar weakness, institutions are buying gold. We've got other proxies that are supporting this gold upside. So if we take a look at the conditions now, the daily chart is supporting buying. We take a look at the 4-hour chart, we can see that the market is making higher highs and higher lows. One of the areas that I really like to get long in was around about that 43.35 area, right? Which obviously held as a little bit of support as well. If we actually bring the market profile tool in, go from the swing low all the way up to the swing high, we can actually see there was some really nice low volume areas just around about 43.12 which acted as a really nice sort of edge of shelf there. Again, if you look at market profile, the low volume areas can act as support, and also the point of controls, the high volume areas can act as support and resistance as well. So we came back down into this kind of area here. Market has since rallied off the back of that. So I like gold longs. I think this looks really, really good for continuations. If I just drag the point of control over the whole area, you can see around about that 43.35 again would be a very, very strong area of support for price. So in terms of conditions, it's looking good. In terms of strategy, we now have to potentially wait for a bit more of an aggressive move to come from gold now. I like the idea of price coming back down towards those earlier support levels, acting as support for continuation to the upside there. If I look at the hourly chart, we did get a technical setup on Friday. But again, if I was to buy that on Friday, I have to look at my reward to risk ratio, right? So the setup came, if I'd entered long here, stop loss below the 200 moving average, I only have a 1-to-1 reward to risk ratio up to that 44.50 resistance. So yes, it's a valid trade, but is 1-to-1 good enough in this scenario? Probably not. So I want to see if price can come back down towards that 43.40 area, 43.35. That way I can have a bit more of a tighter stop loss, and it gives me a 2-to-1 reward to risk ratio, and I can put my stop loss below that kind of edge of the shelf there when it comes to the market profile. So really like the idea of being gold long here. I think there's some really good options for that. Obviously, as well, it could be a sign that we see other precious metals rally. So things like silver. Silver's at 1.44% today. We know the gold and silver correlation is pretty strong. So we could expect maybe a bit of a rebound here as well, and see silver prices try and trade up to around about $70.50. We could also potentially look at, platinum, as well as palladium as well. Also very, very strong correlations in that market too. So we could expect a bit of a gold or at least precious metals rally. Now, to continue that and really think, we're going to get that and it's going to be supported, I would love to see the 10-year yield fall. At the moment, we are consolidating at 4.7%. So it's kind of still got that almost like potential for dollars to remain pretty bullish. But if we break the 50-day moving average, I think here on the US 10-year, that's going to be a real big signal for gold to push higher. And that's going to be a very, very good opportunity, I think, at that point to really see a big move. So yeah, I like gold a lot. I think we could expect some big moves from gold. If we do trade out of that 43.35 area and we move lower, there is lower areas of support. 42.55 around that area could also be a strong support point, as well as the kind of like the previous breakout highs around about that $4,200 area as well could also be a strong support point for gold. But either way, I like gold longs. I would like to see it pull back a little bit first before trying to get involved, just to give me a better reward to risk ratio. So let's move to the last part of the show. The last part of the show is the skill of the day. This is where I show you a skill that you can use to formulate and upskill yourself. The upskill I want to talk about today is how to identify the initial balance. Okay, so if you don't understand what the initial balance is, the initial balance basically represents the highest and lowest points established during the first 60 minutes of a major trading session. So whether that be the London session or the New York session, it's the first hour of that trading session. Now, a common sort of institutional sort of thing around this is that when price moves out of the initial balance high or low, you look for the kind of breakout within that level. It has to come with some strong volume though. Sometimes the initial balance can snap back to the midpoint, and sometimes when you get a breakout of an initial balance, it can come back. So let me show you an example of this. So I've actually created an initial balance indicator for MT5, right? And MT4. So if I just open this up, let me see where it is. Initial balance probability dashboard. Okay. So what this does, it takes the most important session for that particular chart and creates these lines, right? So I'm on a pound US dollar chart. So what the initial balance is taking in is the London session, right? The first hour of the London trade, right? So that for me is 8 a.m. to 9 a.m. Okay. And that's what it's taking into consideration. Now, what it's suggesting here is two things. The first thing is if you have a very, very small initial balance area, so very tight trading range, the likelihood of a breakout is much higher than if we have a very large initial balance range, right? So take a look at these examples on the chart here. On Friday, we had a relatively small initial balance, right? If we look at how many pips that initial balance is, it was 10 pips, right? So a very tight trading range, okay? So what happened? Probability is we're going to get a breakout, and we did. We had a very strong breakout. Price hit the ATR 1, 2, and 3, potentially even 4 of the day. So very, very strong move out of that. If we take a look at 13th of August, we had a very, very small initial balance area, right? So it's taken in the first hour of the day, and it was 12 pips wide. Price broke out of that here, and it traveled all the way to the first and second ATR levels. Again, very strong breakout. If we look at the 12th of August, this one was even tighter, right? So if we look at the initial balance range here, it was 5 pips, very, very tight trading range. So when that happens, the likelihood is we're going to get a strong breakout. And we did. We had a very strong breakout. We had a test of the initial balance. And in the market went to 1, 2, 3, probably 4, 5, even 6 ATRs above that before seeing a very strong reversal and price coming back to the downside, right? But the goal is here is we can build that into a bit of a trading strategy. Look at this one here. This initial balance was 14 pips. Okay, so a little bit larger than the other ones. And look what happened to price. It ranged, right? We had a range in that initial balance area. Okay, day before that, market broke out, retested the low of the IB range and continued higher. But the important thing is it gives us a potential idea of what we could look at in terms of trading opportunities. And there's a couple of different strategies we can use to determine this, right? So first thing is you can look at the breakout of the high or the low of the initial balance. Look for a breakout with strong volume and a close outside of that area. The second is you could look for a break and retest of the initial balance area or even the midpoint of the initial balance area for an opportunity, right? And the third thing you can look for is a false breakout or a mean reversion trade. So the way that looks is if price heads up to at least 3 ATR, right, or 2 ATR of the move, you can look to fade the move back, right? So let's say price breaks out, the market rallies up to the first ATR. You could look at conditions where you see a potential reversal back to the initial balance zone, okay? If price rallies up to the second ATR, look for a reversal back to the initial balance zone, right? And that one works very well when we have a very strong extended market, okay? Now, obviously, these come with conditions, and you have to use appropriate risk management when you use it, okay? But the first hour of London can obviously, set the range for the day. So when price kind of breaks out of that range, it's often, price trying to find fair value elsewhere, okay? So what you want to do is you want to make sure that you risk small when you're trading this kind of strategy, though, because obviously there's a lot of trades. You're going to be looking for trades pretty much every day. But also you want to back test this. Check out your initial balance. see how the market reacts. Okay. I'm going to leave it there, guys. Thanks for joining me today. Hope you enjoyed it. If you learned something new, hit that subscribe button. Lots of content coming your way. Speak to you soon.